Hi, everyone. In this episode, I'd like to talk about what your cash to close is for your mortgage transaction. If you are purchasing a home, your cash to close is a combination of your down payment and your closing costs. For example, if you are buying a $300,000 home with a 3% down payment, your down payment would be $9,000. Let's say your total closing costs were $11,000 to close the loan. That would be a cash to close amount of $20,000 for the purchase. Now, if you receive, let's say, seller concessions of $5,000 and applied that toward the closing costs, then it would lower that cash to close number down to $15,000. If you also gave the seller an earnest money deposit of $2,500 when you signed the contract, that would also reduce the cash to close number as well. Instead of 15,000, it would be 12,500. Basically, your cash to close number is the combination of your down payment plus your closing costs minus any seller concessions and minus any earnest money deposit. One thing to remember about the funds you use for the purchase is they need to be sourced. That means that they need to be in the bank account documented for at least 2 months prior to the purchase. If you try to use cash that you have in your home, that will not work. If the lender sees a large deposit in the 2 months of the bank statements you provide, they will ask where it came from, and you will have to show proof of it. This is to comply with the Patriot Act and to protect from money laundering and terrorism. This is Chris Deptula with Motto Mortgage Champions, turning your questions into confidence because informed buyers win.